All right, and let's keep on rolling. So again, for headline number 2, according to CNBC, who is much in the headlines this week, nice reporting from them, Target said it will take a short-term hit to profits as it cancels orders and marks down unwanted merchandise. Target CEO Brian Cornell said the big box retailer wants to clear room for the merchandise that it wants to sell, like groceries and back to school supplies. And Target anticipates that its operating margin rate for the second quarter will be around 2%, which is lower than the outlook it gave less than 3 weeks ago, which the timing is important on this story. The company also reiterated its forecast for sales growth and said margins will look healthier in the back half of the year. Truett, we let you off easy on that first one. What's your take on this story? What does this say about Target, or maybe even the state of retail more broadly?
Yeah, I mean, to me, I think it's a story of state of retail more broadly.
You
There's
do.
been a credible amount of news in terms of the souring consumer sentiment, right? Multi-decade low, inflation multi-decade high, and savings that were built up through stimulus rapidly burning through with consumers. And so it's been interesting just to see the inventory builds across retailers that they reported, right? And almost to a retailer, there's something 40+% build year over year and flattish to negative sales. And so I think it's a challenge that everyone is facing in terms of too much of the wrong stuff. I think Target is very differentiated in terms of being willing to take their medicine. And so, obviously coming out 3 weeks after a report, cutting your operating margins, more than half is not something that anyone aspires to do. But if you're going to do it and want to well position yourself, I think there's something really encouraging about the decisiveness here. And if you say what you will about Brian Cornell, if he has a lot of conviction, and once he decides on something, it appears they at Target do move on it. And so I think the strategy is right from a standpoint of cleaning through the inventory and trying to get positioned. Cool. I don't think you'll see many others do it because whether it's the wherewithal financially or the credibility publicly, I think folks will try to just manage through this and not take the impact to rate. And frankly, longer term, I think that'll be to the detriment to the year. But I think it's very difficult.
Control
So, you'll just keep, I would say not take the markdowns as fast as you can to try to manage through that, and frankly hope that there's other methods, whether that's pack and hold, whether that's the consumer does return to some of these categories. I just don't think there's any leading indicators that would state that's going to be effective. And so I think it's going to be a challenging year. And as you all know, buying cycles have already happened 9+ months. So these aren't things that are easily solvable. So I just think it'll be a really challenging year for retail on the earnings side. And frankly, it's another reset year.
Yeah, the part about why Target came out so soon relative to other retailers with this, I think that's interesting. I want to double click into that more particularly. Sure. But Anne, what do you think?
Well, I initially read this, and you and I were together when we read this headline.
Yeah.
And I have to give you some credit here, because when these earnings first came out 3 weeks ago, you were like, inventory, they have a huge inventory problem. This is going to be an issue. And
I will take credit for that, actually.
And sure enough, a few weeks later, here we are. And I think it's interesting what Truett said, though, like how they're willing to take their medicine. I think it did take a lot of courage for them to come out and say this and take this approach. But $15 billion in excess inventory, that is extraordinary. And so I guess my question is, like, what does Target do? What do other retailers that Truett mentioned, what does Target do? And how much is this going to impact some of the other initiatives? Because storing all of that inventory is not cheap.
Yeah. And that's why I want to double click into this on why Target. I think you're bringing up a good point too, which is Target is in a unique position here because of their back to college and their back to school business. And so that makes me think, one, they almost had to do it to clear the space for that stuff, right? Which is essentially what they're saying.
Yeah.
But then you brought up another point too, which got me thinking as well. Like, yeah, you're buying that stuff 9 months ago. So where and when did you recognize this decrease in demand? And are you going to have the same problem here as you go into back to school, back to college again too, because you overbought to that level as well? Or how are you thinking about that? So So yeah, I'm curious what you guys, what both of you from the AM side think about that, because it's a really interesting question when you start asking yourself, like, how did we get here to begin with? Why did retailers in general believe their sales forecasts were going to be so high to validate these levels of inventory? Or was it something fundamental to the supply chain and how it was operating? What's your take?
Yeah, I mean, I'll share a little bit more, and obviously Chad jump in here. I mean, I think it's a few things. I think one is even the best institutions with the best customer insights missed this, right? I mean, I think that's very clear in terms of how rapid the change in customer behavior was going to happen. And you've seen all the pandemic winners suffering right now, as there's been a complete reversal of many of those behaviors. I think the second is the odd negative impact of having the supply chain prowess that Target had in terms of bringing goods in faster, provide less latitude to cancel orders, to readjust on the factory side, all those types of things, right? Given that they chartered their boats and had everything kind of in time, that's actually negatively impacting them. I think the third is, it is a good question, right? Back to school. So what does that mean? And you know, on one hand, you could argue, well, the first purchases that families make are always for their children, right? Whether that be, you know, basic necessities or food, et cetera, or clothes, right? So that's, you know, likely going to happen. But at the same time, with inflation at 9, you know, hovering around 9, anything is kind of on the table. So you'd have to expect it to have some impact of behavior. And the calculus that Target must have made is, our probabilities are a lot better in back to school clothing than it is in TVs and swimwear and other things that we just totally missed on, right? Outdoor furniture, et cetera. But obviously, Chad, what's your thoughts as well?
Good point. Yeah, Chad, why don't you get the final word here?
Yeah, I mean, Truett's got a phenomenal perspective, having lived this at JC Penney. You know, my analogy and reference is a little simpler, and so being a big Seinfeld fan, I couldn't help like harken back to this like Seinfeld skit where he talks about going to the store and wondering if you have any milk, right? Because the worst thing is to be without milk. So you get it, you buy it, you go home, you see it in your fridge, and now you have way too much milk. So you're inviting all the neighborhood cats over to drink it. You're washing your face in it, right? Like you can't be left without certain, you know, inventory levels for key events. And I think the why Target element is interesting. So if you compare it to, you know, Walmart, which is a little bit more basic goods, right? And just seeing the big swings in certain categories for Target being a little bit more fashion oriented, they're probably a little bit more privy to it. I mean, everyone is feeling the influences, right? The combination of pandemic inspired consumer preferences and surging demand. Then you have the deep supply chain bottlenecks and the risk of not fulfilling those needs fast enough. So you overcompensate with inventory. It's too late. Demand is stabilized. You're left holding it. Like it's classic bullwhip effect, right? But for me, you know, the question is, and you guys are pushing on the right things, is this just everything worked against Target and these other retailers because of these anomaly events? Right? Or, you know, are we actually seeing something that's going to be more episodic versus one time, right? Like, could it be that retailers' demand signals are not as well honed and predictable as they used to be? And it's probably not and supply chains are built to those more predictable patterns that we'll never see again, right? Like pandemic was a once in a lifetime event of consumer buying behavior. And then 2 years later, it's once in a generation historic inflationary environment that's again creating big shifts in discretionary categories. Like, is that it? Are we done? Like, or will the next storm come, and is Target and others prepared to weather it?
Yeah. No, I love that point, Chad. I think that's a great perspective on just how flexible we need to be.
Yeah. And the one thing I'll say too, that I have to call it out, the point about clearing through the inventory to make room for groceries is total baloney. Now that I'm thinking about it, and I hadn't thought about that until just now. The supply chains are different. The storage space is different. Like the only way it would impact you is if your back rooms in the stores are so overrun by product, you can't even take those orders.
Right.
But to use that as the rationale here is kind of hooey. I'm just going to call it like it is, because that's what we do on this show. But I didn't think about that until Chad just used the Seinfeld milk analogy too. Like that's not what's going on here. So it makes me do wonder though, again, like how big is this issue down the road? But we'll find out.